Hello, it's Darin Eppich. Welcome back to my YouTube channel. We cover a new video every week about real estate in Los Angeles. Sometimes we dive into luxury homes, luxury home tours, educate buyers and sellers. If you want to see more content like that, please subscribe. If you like the video you see today, please like my video. Today we're going to kind of go into the recent national headline news, which was of Zillow quitting real estate, basically. A lot of people are talking about this. It came up today even at a business conference I was at from someone from New York that's an investor. They asked me what my thoughts were, so I decided to dive in a little bit. And just so you guys know, I'm a luxury realtor at Sotheby's on Sunset in West Hollywood. I do remember when this topic came about in 2018 and was brought up. There was a lot of buzz about it because we didn't know how it was gonna play out. We thought it might be disruptor, they could change the game. We didn't know. There was part of me that thought maybe this is just a bad idea. Then we also remember when they rolled it out in 2019 and it did become a disruptor. Like I said, we're gonna discuss the Zillow headline of them quitting real estate. I'm gonna go over the iBuyer backstory from Zillow, Zillow Closing iBuyer, the ripple effect, will it crash the housing market? And then kind of, close it up with my final thoughts, kind of like Jerry Springer, my opinion and my final thoughts on it. So here we go. First, we'll go into the Zillow iBuyer backstory. So they basically started the iBuyer program in 2018 and then started launching Zillow Offers in 2019. To give you kind of an idea what a Zillow iBuyer is, or on their website, an iBuyer is a company that buys homes almost instantly by relying on technology, the Zestimate algorithm, to determine a market-based cash offer. iBuyers complete the purchase, transaction online, often sight unseen, which means the homeowner gets to sell their home in a quick sale while skipping a lot of steps in the traditional home selling process. And still on their website, because they haven't closed it down completely yet, because they're still trying to get rid of this inventory. On the iBuyer.com through Zillow, they operate in the following markets: Atlanta, Austin, Burlington, Charlotte, Cincinnati, Colorado Springs, Columbus, Dallas, Denver, Fort Worth, Fort Collins, Grand Rapids, Houston, Indianapolis, Las Vegas, Los Angeles, Louisville, Memphis, Miami, Minneapolis, Nashville, Oklahoma, Orlando, Phoenix, Portland, Raleigh, Richmond, Riverside, Sacramento, San Antonio, San Diego, St. Paul, Tampa, Tucson, and Washington, D.C. Quite a few markets. And at one point, iBuyer program Zillow Offers, they thought they were going to change the game. They had predicted at one point by 2024, they would be making $20 billion a year, selling about 5,000 houses per month. Now, just so you know, I'm not going to go into who else was doing this, Redfin, etc., Open Door, but Zillow isn't the only player that was doing this. But that's not what this video is about. Now you have the backstory. You see that they were definitely going in on this aggressively. They didn't really tiptoe into it. They didn't start out with a few markets. I think that's like 25 plus markets, as you saw me rattle off all those names and cities. Apparently what they focused on were areas that they saw growth, but also great neighborhoods, great cities, very appealing in terms of what they thought investors, like from an investment standpoint, for flipping. So that's what the iBuyer program really was about. They wanted to flip these homes, buy them, and then sell them later for a big profit or a good profit. So now we'll talk about the negative implications of Zillow closing iBuyer and what the real ripple effect is. It's gonna really change their business. It's gonna be, I don't know, tough for them to recover, but it's gonna be tough on the Zillow Redfin marketplace, if you will. And it's gonna damage a lot of people's lives, unfortunately. People that were invested in the company or working for them. This isn't just like a small blemish. Here we go. This is what happened in the third quarter of this year, the recent news that made national headlines and why everyone's talking about Zillow and the potential housing crash or what's going to happen next in the real estate market, because Zillow is such a big player and a big brand in terms of online presence. And a lot of people use Zillow every day. Let's be honest here. I have a Zillow profile. This was big news. The CEO, Rich Barton, during the third quarter earnings, iBuyer was no longer going to buy properties. They had intended it, like I said earlier, to flip homes. They bought almost 9,700 homes in the third quarter. They've only sold a little over 3,000, so that's less than 33% of the homes they bought they've sold so far. They're going to immediately try to dump them, I know that much, or sell them to another, company or, like a BlackRock or something to, buy them in bulk and, write off the losses, if you will. And then they'll in turn try to sell them, etc., and maybe they'll break even or write off their losses as well, or who knows. The third quarter net loss was over $328 million. They predict in the fourth quarter another $240 to $260 million in net loss. So there you go, well over $550 million to $600 million in net loss in 2 quarters for Zillow. Big net losses. They're going to lay off over 2,000 employees, 25% of the workforce. So now Zillow is 75% of the size of the company it used to be. And their stock price dropped from February 2021. It's dropped 2/3 its value. Now it's down to about $63 a share. The CEO, when asked, he said initially it was due to supply shortage and labor shortage. And we all know, me and my partner Corey know from dealing with investors that are doing flips or, taking things down to the studs and making them beautiful to resell or rent. I mean, they're trying to buy a couple properties at a time in a certain area because they can get better pricing on bulk buying. But everything's so backlogged between supplies and labor shortage that you can only do so much. So this really, it's a good statement. It's a fair statement, but you can't gamble all that. That's why it was such a big risk doing so in the first place. But I digress. The reality is it was unpredictability in forecasting home prices. I'll talk about it later, but I mean, real estate market, stock market, these markets, they fluctuate. No one has a crystal ball. That's why you ease into something. You don't go all in right away. You kind of like a smart business company, you would go in with all this cash and kind of maybe step into a few markets, and then if it works, keep going. But they base it on a software. I'll talk about that a little later. But yeah, so Zillow Closing, iBuyer, and the ripple effect. I mean, you could see there's a lot of damage done here. The company is probably going to recover, but definitely made a mark. It definitely didn't work out, and they're closing the segment. They were banking on it hugely. I mean, this was probably going to be their future. I mean, that is how they talked about it. Because of this, because of Zillow, quitting the home buying, iBuyer program or Zillow Offers, what does this mean for the housing market? Is it going to crash? We'll talk about that here in a second. Now, probably the segment that everyone really, or buyers, sellers, anyone, the government wonders, and I don't think anyone's saying that this is going to happen, but will the housing market crash? Just because Zillow bought up about 10% to 11% of the actual U.S. housing inventory, or a little over 9,000 homes, or almost 10,000 homes compared to 700-something thousand homes, they bought up about 11% of the supply, or they own about 11% of the supply. Are they actually going to be, does this make a huge dent in the market? Is this foreshadowing? Look, I don't have a crystal ball. I think this is more of a Zillow problem. I don't think anyone's saying that the housing market's going to crash because of this, but I can see why people would have concerns. It's still yet to be determined. Like I said, no one has a crystal ball. If they did, they'd be rich. This is really a Zillow problem. It was really a problem with them going all in, them going into so many markets, them betting on their own software, their algorithm, the Zestimate. I'll go on a tangent here real quick. The Zestimate is quite honestly not good. It's so rough. It's pretty numbers based, and it's really broad. I mean, it doesn't even, a lot of times when I see it and people ask me, buyers, investors, I'm like, don't even pay attention to it, because it takes a lot more effort than just running certain data points in software and data. You got to really look at the homes. You got to look at the streets, the areas, what's sold in the area, down the street, next door, what's sold in the last 3 months. I don't even know where they get their numbers from, but a lot of times they're either really low or really high. It doesn't really ever seem to be really on point, at least from my experience. So the fact that Zillow bet, like I said, the farm, or took this big gamble and bought so many properties and put so much effort into this whole iBuyer program Zillow Offers is pretty astounding. They should have known that their Zestimate software algorithm is flawed and has been flawed. And so to use that to base this strategy, like I said, it's really a Zillow problem. It was a really bad idea. Buying properties to flip and make profits. There's people that do this for a living. They're flippers. They usually use a really strong investor agent, someone that is a good broker, a good real estate agent, experienced, knows how to number crunch. They know how to number crunch. They act fast, they think quick, but they also know the marketplace, or they know that local area. They only do a few at a time. They sometimes only do one at a time or a couple at a time. They don't buy, a few hundred a week or a few hundred a month or whatever, 10,000 in a quarter. They go a few at a time and then flip them, make the profit, and then keep searching for areas of opportunity. And those are people that do a good job at it. You know, the ones that get more specialized, they have to have bootstraps on the ground that are doing this for a living. They're not going off of just like a Zestimate and just going hip, boop. I don't think they had agents. I think they just had a software and they're just like, well, that property, we'll buy that one. This is an area, we'll buy this one. Obviously, the method failed pretty badly. And it shows you that you still need real people, not computers, you know, data, stats, software. You still need an agent, a specialist, people of like partners to run them by, someone to crunch numbers. You don't just have a company with cash flow and a software that is flawed to come up with, you know, strategy. You need more than that. You need like a voice of reason before you go in to buy a property to flip it and make a profit. I mean, there's a lot that goes into it. It's not that easy. I mean, we have investor worksheets we use to help investors buy properties in Los Angeles. I mean, it's a lot of work. Now is my final thoughts a la Jerry Springer that I used to love watching as a teenager. Overall, it was a big gamble for Zillow. At the time when it was announced in 2018, people were 50-50. We were talking about it in the office, like I said earlier. People didn't know what was gonna happen. We thought maybe Zillow is a brand that people are really into. They're using it all the time as a tool to search online. People will find properties that way. It was a great resource, a great tool. Zillow was everywhere. And I came from a corporate background, and I was like, well, they got capital, they got brand recognition. They might be a disruptor. Who knows? They could change the game. I mean, I was 50-50 on it, and being a newer agent, I was like, yeah, they could really disrupt this industry and change how everything is done and change how even agents behave or how we facilitate the process or how we help buyers buy properties or how we help sellers sell properties. This could have been a game-changing, and I still don't think it's done. I still think there is a chance that something like this will evolve eventually and maybe have, staying power. It just can't be rolled out so quickly, and it needs a better algorithm or data or software to be able to pull it off. But I still think, now that I have, done more deals, been around the business a lot more, interacted with enough partners, I still think you need a strong agent, strong brokerage, specialist, key partners, vendors, contractors, lenders. I think you still need human beings that are specialists at their job to be able to determine and facilitate real estate. I still think you need a broker, an agent. I still think you need all these key factors for buyers and sellers to do transactions. They serve a purpose. This whole thing happening with Zillow and Redfin probably will be next if they're even in the marketplace as much as Zillow was. I don't think they are. But it'll reinforce why agents are so valuable, why brokerages are so valuable, why we facilitate transactions. It really actually is kind of in the nicest way possible, a sigh of relief, because I remember a couple of years ago, I was like, shoot, did I get in the wrong time into real estate? Did I enter when now technology is going to take over and it's just going to be like self-service checkout at a grocery store and no need for an actual human being? I mean, felt these times before. But, at the end of the day, you can't bet the whole farm to buy thousands of properties in a quarter and expect them not to have issues. Or the stock market, real estate market, these are unpredictable markets. These things fluctuate. If it was as easy as having a software or a Zestimate or a tool that could just predict everything and you could just profit and go all in like they did, don't you think more people would be doing it? I mean, I think they just jumped the gun too much, too big, too fast. I mean, go big or go home, but I mean, they're not from Texas. So I just think it was just, a poor strategy overall when you look at it in hindsight. And those are my thoughts. So until next time, take care of yourselves and each other. Thank you so much for stopping by. Have a wonderful day. Thank you.